Hi friends, good morning. Now we are going to discuss second module of our syllabi. Today onwards we would like to go through the second module, that is computation of income under different heads. We are already discussed in our previous classes 5 heads of income, that is income from salary, income from house property, profit or gain from business or profession, capital gain, and income from other source. Now we move to the how to compute the income under different heads. First head, that is salary. In this module we would like to discuss what is meant by salary, what are the components of salary, how to calculate the total salary or taxable salary, how to calculate what is meant by allowances, what are the different types of allowances, what is meant by perquisites, what are the different types of perquisites, and what is meant by profit in lieu of salary. Then what are all the benefits which are credited to a person after his retirement, how to calculate gratuity, how to calculate pension, and over and above how to calculate taxable salary of a person up to the time of retirement or after the date of retirement. Now let us see one by one. First one, that is income from salary. We know that income from salary, the head income from salary means, we have discussed what is meant by heads of income and what are the simple meaning of these different heads. The gross total income of an assessee is the total of his income from different heads of income earned during the previous year. This is called total income. Those income which do not find a place under any of the next 4 heads are taxable and fall under the first head of income, that is income from salary. It's very simple. Any income which do not find a place in 4 heads of income can be grouped into first head, that is income from salary. The gross total income so computed is reduced by the deduction allowed under chapter 6a that we are discussed in our previous classes. Chapter 6a means 80c, section 80c to 80u. We are colloquially call it as 80 family deductions. We will discuss all these points in detail in our next videos. Practically, income from salary is the head which deals 3 sections: section 15, section 16, and section 17. It's a very simple module as far as sections are concerned, but it is very important. This very important for our exam point of view or for our content wise. Each and every student should understand this head income from salary. Without this head, you can't appear your exam or even attend single essay. So it's a very important area of our syllabus. From our past experience, almost more than 40 or 50% of question can be expected from this module itself. So from this discussion it is very clear. Now we come to the point. 3 sections are dealing income from salary. First one, that is chargeability section. We know what is meant by chargeability section. In simple, chargeability means which are the items that are chargeable under the head salary? Three things we are borne in mind under chargeability. All of you please take the notes. First one, salary due. Second one, salary paid or allowed. And third one, arrears of salary. These three things contribute the chargeability. I will repeat: salary due, salary paid or allowed, arrears of salary. And the second one, that is deduction. Deduction means after calculating the taxable salary, Income Tax Act itself provide some allowable deduction that can be deducted from the taxable salary. Then we have a net taxable salary. We are liable to pay tax on this net taxable salary. So deductions are those permissible items which can be deducted, or permissible expenses which can be deducted from the gross salary. There are three deductions. Again, we have 3 points towards section 16. First one, that is standard deduction. This deduction can be claimed by any employee, whether individual or HUF, whatever may be. Any employee can claim this standard deduction. That means straight away he can deduct 50,000. Last year that is 40,000. This year onwards, or Finance Act 2019 onwards, the standard deductions has changed 50,000 to 50,000 from 40,000. Before that, standard deduction is limited to 40,000. Now we have standard deduction as 50,000. Then secondary deduction, that is entertainment allowance. When we are receiving any allowances as entertainment allowance, that can be claimed as deduction also only for government employees. So entertainment allowance is another deduction which can be claimed only for government employees. And another one, that is professional tax. We know what is meant by professional tax. Professional tax is the tax which is levied by the local authority or municipality, corporation, etc., in which the organizations are working. Suppose we the people, faculties from PSMO college, are liable to pay professional tax to the Tirurangadi municipality as 2,500 or 2,750 rupees per year. So professional tax is an expense which can be claimed as a deduction under section 16. So three deduction can be claimed under this. First one, standard deduction, that is rupees 50,000 for any employees. Another one, that is entertainment allowance, that is only allowable for government employees. And the last one, that is professional tax. Whatever may be the amount paid as professional tax can be claimed as deduction under section 16. And the last one, that is section 17. Section 17 deals with some definitions or the real picture of income from salary that contribute components of salary, perquisites, allowances, profit in lieu of salary, etc. These definitions or components or perquisites or allowances all contribute the income from salary. This section 17 will discuss in detail later on. Okay. See, income from salary, section 15. Salary means, we are already discussed the three things that contribute chargeability of salary, section as per section 15. Salary due, salary paid, or arrears of salary can be explained here in this. Salary, first one, any salary due. Any salary due means any salary due from an employer or former employer to an assessee in the previous year, whether paid or not. It's very, very clear that any salary due, that means any amount, due as salary from any employer, that means existing employer or former employer to an assessee in the previous year, is charged under salary, under the head salary. So salary, the terminology or the scope of salary means any amount which is due from an employer or a former employer as salary to the assessee in the previous year, whether it is paid or not. Even unpaid salary which is due is taxable under the head salary. The next, any salary paid or allowed to him in the previous year by or on behalf of an employer or former employer, though not due, it's very important, though not due, which is paid or allowed to him, no need of paying. Any salary paid or allowed to him in the previous year by or on behalf of an employer or former employee, though not due or before it become due to him, it is also very important. Then the last one, that is any arrears of salary. Arrears means balance amount, that is called not balance amount. We are suppose, let us see an example. Suppose a person is appointed on 1st March of the financial year, and automatically the end day of the month salary due, technically, or any other problem that may leads to the non-payment of salary during this March or April or May. Then he can draw salary. Suppose the salary bill has passed and employer is ready to give salary for the month of June. There is a gap, March, April, May, 3-month salary that is pending. So after passing of these bills or formalities, employee is responsible or he is able to draw salary of the last 3 months, March, April, May. This salary for the last or the past working months or years is called arrears of salary. So any arrears of salary paid or allowed to him in the previous year by or on behalf of employer, not previously charged or not, it may not be previously charged or not, it's a material, any arrears of salary. So 3 things which are coming under the scope of income from salary. First one, salary due, salary allowed or paid, arrears of salary. From the it is clear how far income from salary that is spread. Okay, then while we are discussing these section 15 and scope of the salary, some important point that should be borne in mind while we are discussing these salary. First one, that is we are discussing salary due. Salary due means legally enforceable right of an employee. That's called salary due. An employee is legally bound to get, that's called due. Legally enforceable right of an employee to get salary, that is called salary due. The next important thing that we are discussing, employer-employee relationship should be there. That means there should be an employer-employee relationship that constitutes salary. Without, suppose we are drawing an amount from a person, there is no relationship between employee and employer, it should not be considered as a salary. I will give an example for that. A remuneration of a parliament member or MP. Examination remuneration of teachers. Suppose we people are doing some sort of amount as a part of invigilation duty or correction of answer sheets, etc. So are not taxable under the head salary only because of there is no employee-employer relationship. Since there is no employer or employee, only because suppose we know that some MPs or MLAs are doing social works, there is no employer, there is no employee, even though they are drawing salary lakhs and lakhs of rupees, but all these salaries are exempted under the head salary. Don't misunderstand, it's not taxable but it is not taxable under the head salary. The next point that we should consider, that is place of accrual. That means accrual of salary is the place where the services are rendered, where we are rendering our services. This is the place of accrual. Amount paid abroad in respect of the leave earned in India is deemed to have been accrued in India. The next one, payment received after cessation. We know that receipt from a person other than employer is taxable under the head income from other source. It will be discussed in later. Then cessation means taxable payment received after cessation or termination of the employment, that is taxable under the head salary. Then next one, salary surrendered means surrendered to the central government shall be excluded from income. Suppose we are surrendered to the central government, it is excluded from the income. The next compulsory deduction. Compulsory deduction means any employer out of salary should be added to the salary income. Example, insurance premium, professional tax, etc. deducted by the employer are added with the salary to arrive at a gross salary of the employee. I will give an example or clear picture. Suppose I am drawing 1 lakh rupee per month. So total my salary is 12 lakh. I should pay professional tax, take an example, rupees 10,000. So the net result by looking this example, 12 lakh minus 10,000, that is 11 lakh 90,000. Getting? But here we have to calculate, we have to get into the gross salary of employee. We should add these compulsory deduction along with the salary. That means we should add these, whatever may be the deductions, we should add these deduction along with the salary in order to get gross salary. That means net salary 11,90,000 plus 10,000 professional tax is equal to 12 lakh. That is the gross salary. Then next one, that is advance salary. Any salary paid in advance is included in the total income of an assessee during previous year. It is not included in the same when it become due. And the last one, that is salary paid to the partner. We may be discussed in our financial accounting classes. Salary paid to the partner or business partner is not considered as the salary or firm partner. It is paid by the firm to its partner, is an appropriation of profit. It's not a salary, and hence it is not included under the head salary. It may be taxable profit and gain of business or profession, but it is not taxed under the head salary. So all these points that all of you please bear in mind while we are discussing chargeability section 15. Okay. Next very important thing, that is definition of salary. I already told you section 15 deals with the chargeability that we are discussing. Section 16 deals with the deductions. We are discussed in brief 3 deductions. Later we will discuss in detail. While we are discussing deduction is a separate chapter or separate area. 3 deductions we have. Standard deduction rupees 50,000 for all employees. Entertainment allowance only for government employees. Professional tax whatever amount employee paid. And then next last section, that is section 17. We are already discussed. Section 17 deals with some definitions or components of salary. Components means perquisites, profit in lieu of salary or allowances, etc. Let us see first one, salary. As per section 17 subsection 1 defines salary. Salary includes, this section gives an inclusive definition. It does not give a precise definition. It gives an inclusive definition. That means salary includes wages. We know what is meant by wages. Daily wages we have. Then any annuity, yearly or pension or gratuity, service benefits, fees, commission, perquisites. Perquisites means any casual emoluments attached to an office or a position in addition to the salary. The term perquisites and the details that we will discuss in later as a separate area. Then advance salary, arrears of salary, leave salary. We know what is meant by leave salary. Leave salary means any payment received by an employee in respect of any period of leave not availed of by him. People have or employee have 15 or 20 days leave. Suppose a person is not availed any leave, commuter leave or whatever may be, does not consider casual leave. Clear? Casual leave is another area of leave. There is no payment on casual leave. Suppose a person not availed any leave during his service, he may get some amount as engagement of earned leave. So it's also taxable under salary. That include salary. The next, annual accretion, that is annual increment. Year by year, employees are getting increment in percentage or in rupees. This increment is considered as a salary. The next, transferred balance. Transferred balance means that we will discuss later as a separate area only because of its important question. It's 1 mark question. Transferred balance is simply we can say that transferred balance is the balance that is standing to the credit of employee in the organized provident fund that may be transferred to the unorganized provident fund that is transferred to the organized fund is called transferred balance. That we will discuss later, don't worry. The next, contribution made by the employer may be the government or any other employer to the account of an employee under the pension scheme, national pension scheme. Government of India has passed NPS, national pension scheme, after 1st January 2004. So after that, any contribution made by the employer under the scheme is also considered as the salary. So these elements that contribute the scope of salary, whatever means we are drawing amount, automatically consider as salary and is taxable under the head income from salary. Now we conclude today's session. Next, another video we have by discussing different definitions section under section 17 and other area of income from salary. Thank you to all. Okay.